Welcome to The Explainer. So if you're a Gen Z BS accountancy student and you're currently staring down the barrel of the Management Advisory Services section for the LECPA exam, you are in exactly the right place. Today, we're going to build a study framework that's actually engineered for how your brain works. We're not just trying to cram for a quiz you have next week. No, we're designing a cognitive architecture for long-term retention. The goal is to get this information locked in so tight that you can effortlessly pull it up 2 or 3 years from now when you're actually taking the board exams. Sound good? Okay, let's dive right in. So here's the million-dollar question. How on earth do you memorize that massive, super intimidating cost of goods manufactured schedule without it totally evaporating from your brain the second you leave the classroom? Well, the answer is simple. You don't. Rote memorization is honestly a really fragile tool, and it won't last 3 years. Instead, you're going to visualize it. We're going to use spatial visualization and a cool psychological concept called chunking to literally hack your memory. By translating this giant wall of text and numbers into a physical space in your mind, we're going to make the complex feel completely intuitive.
Here is our agenda for today, just to help you set up those mental folders. 1. Tracing the cost flow. 2. Hacking the COGM schedule. 3. Calculating cost of goods sold. And 4. Our LCPA rapid bullet review. Let's get to it.
Section 1. Tracing the cost flow, from physical to financial.
Okay, I want you to close your eyes for a second. Seriously, imagine stepping onto the cold concrete floor of a massive, super busy manufacturing factory. In a manufacturing company, inventory literally physically flows through 3 totally distinct rooms. First, you've got the raw material storeroom. Next, the active factory floor, which we call work in process. And finally, the quiet warehouse, our finished goods. Now, here's your golden rule for long-term retention. Costs move only when the physical product moves. As that product gets pushed from room to room, the financial costs get pushed right along with it, moving from one ledger account to the exact next one.
Right, so what actually goes into those physical buckets? Well, those are your product costs. I want you to think of product costs as sticky. They literally attach themselves to a unit of product as it's being manufactured. The whole shebang consists of your direct materials, your direct labor, and your manufacturing overhead. And here's a super vital concept for the LCPA. These are inventoriable costs. That means they sit quietly on the balance sheet as assets. They only ever become an expense on your income statement when that product is actually sold. Keep that in your back pocket.
All right, Section 2. Hacking the COGM schedule using the base formula. Okay, we're going to take that massive cost of goods manufactured schedule and we're going to break it down into perfectly digestible chunks. We'll use the ultimate universal study hack that works for all 3 inventory T accounts. I call it the base formula, BASE. Beginning plus additions minus ending equals transferred out. Seriously, instead of trying to memorize 3 totally different, ridiculously complex formulas for the exam, you just need to build this one single logical neural pathway. You apply this exact same logic to raw materials, to work in process, and to finished goods. It never, ever changes.
Let's see how this actually builds, starting with that first room we talked about, raw materials. You start with the beginning raw materials you already had sitting on the shelf. You add your additions, right, which are your new raw material purchases. That gives you your total materials available for use. Then you subtract your ending inventory, which is whatever is still sitting on the shelf at the end of the period. And what's left over, obviously the amount that was physically transferred out onto the factory floor. This is our first major chunk, direct materials used. You see how intuitive that is? You just mentally walked through the storeroom.
So now that those materials have been pushed out onto the factory floor, into the work in process room, we have to actually start building the product. And, things don't build themselves. We need human effort, which is our direct labor, and we need to keep the factory lights on, which is our manufacturing overhead. So when you take the direct materials used from our very last calculation and you add direct labor and overhead to it, you get your total manufacturing costs. These are all the costs we poured into the production process during this current period.
Okay, you need to pay very, very close attention to this next distinction because this is a classic LCPA trap and it is specifically designed to catch you off guard. Total manufacturing costs and cost of goods manufactured sound basically identical, but they are fundamentally different things. Total manufacturing costs represents what is happening right now, the costs incurred during the current period. But cost of goods manufactured represents what is actually totally finished. It's the cost of the goods completed and physically pushed out of the factory. Please do not mix these two up on exam day.
All right, let's find that completed amount by applying our base hack to the second room, work in process. You take your beginning work in process,
the half-finished stuff from last month. You add your additions, which we just figured out are our total manufacturing costs. You subtract your ending work in process, the stuff that's still stuck on the assembly line, and boom, what is left? The cost of goods transferred out. That is your cost of goods manufactured, or COGM. You've literally just hacked the schedule by repeating the exact same visual pattern.
Moving right along to Section 3, calculating cost of goods sold and taking it to the sales floor.
Now that the product is fully built and ready to go, we are going to take these completed goods out of the factory and move them onto the sales floor. Let's run the base formula one final time in the finished goods warehouse to really cement that repetition. Beginning finished goods plus our additions, which is the COGM we just calculated, gives us our cost of goods available for sale. Subtract the ending finished goods, still just sitting around in the warehouse, and you get the grand finale, the cost transferred out to the customer. This is your cost of goods sold, or COGS. It's the exact same logic 3 times in a row. It's brilliant!
So the absolutely crucial point here is knowing where COGS actually goes. It lands straight onto the functional income statement. This is the exact moment those sticky, inventorizable product costs finally transform into an actual expense. You just match your cost of goods sold against your sales revenues to calculate your gross margin. Then you subtract your operating expenses. Remember, these are your period costs, like selling and administrative expenses, to finally arrive at your operating income. Simple, right? Finally, Section 4, the LECPA Rapid Bullet Review. Let's consolidate these rules.
All right, take a deep breath. We're going to run a rapid-fire consolidation of these rules to absolutely lock in that 3-year retention. Try to guess the answer before I say it. First, costs move when the physical product moves. Raw materials to WIP to finished goods. Second, product costs, materials, labor, overhead are inventoriable. Period costs are expensed immediately. Third, quick terminology check. Prime costs are direct materials plus direct labor. Conversion costs are what it takes to physically convert those materials, so direct labor plus overhead. Fourth, the ultimate hack for all 3 inventory accounts. Beginning plus additions minus ending equals transferred out. And lastly, COGM is the cost of completely finished units, while total manufacturing costs are just the costs added during the current period.
So let's wrap this up with a thought. When you are sitting in that exam hall 2 or 3 years from now, and you look at an income statement or a manufacturing schedule on the test, are you just going to see a list of dead, disconnected numbers? Or will you close your eyes and mentally walk the assembly line? I promise you, true understanding outlasts rote memorization every single time. By visualizing the physical flow of that factory, you've just built a mental framework that honestly won't let you down. Keep reviewing these spatial chunks, and you are absolutely going to crush the MAS section of the LECPA. Thanks so much for joining me on this explainer, and happy studying.